Let's just wait for other people to join us so that we can start with our session. So our session is going to start in a few seconds. So if people come, they're going to find us along the way. They're going to find us along the way, just a few seconds. Okay, guys. Let's just proceed with our session. Good evening, everyone in the building. I hope everyone is good. So I hope everyone is good. I hope everyone is good. I hope everyone is good. So I'm good. I see here. I'm good. I see. I'm good. Mama in the building. Okay. Code by Q. You can unmute yourself so that you can speak as well, so that I can hear you guys. Because of it's just the three of us. So you can unmute yourself. You don't have to stay unmuted. Because like what I'm basically gonna do, guys. I'm just gonna start with taking your questions first. I'm gonna start with taking your questions before we can proceed as to what is it that you want. Okay, guys. So now, because I can see that the session is about to start. So what I'm basically gonna do, okay. Okay, guys. So now I'm gonna take your questions. So, okay, I can see that we have 4 people now in the building. That is nice. That is nice. I can see. Mac iPad joined us as well. Okay, guys. So I'm gonna start with Dylan. Dylan, I'm gonna start with you. So I'm just gonna put in Dylan Q's. So Dylan, this is a question. So you're gonna ask me anything you want to ask. Then I'm gonna note it down so that I can be able to respond to your question as like a whole. I don't have to go through one by one question, right? Tolip, did you get that? Can you hear me, guys? Can you hear me, bro? Can you hear me, guys? Can you hear me? Because I need to see if we
I
are
can hear
on the
you.
same page, guys. I need to see if you're on the same page.
I can hear you, yes.
You can hear me powerful. Okay. Okay, powerful. So, okay, guys. So now, Dylan, I'm starting with you. What do you want us to go through? Dylan?
He just typed in the messages that his sound is off or something. His or her sound is off.
Yeah, I can see.
So
Okay, Dylan, here on my side, I can see that you have access to speak. Your mic is open. But okay, let's just skip Dylan, guys, because Dylan is a bit held up. So let me take a Mac iPad.
no. Okay, so do I just speak or should I type
Yeah, you
the
can just
question?
speak. You can just speak. Then I'm gonna type everything that
Okay.
you have
Okay.
inquiries with.
Okay, the first one I have is with rejection candlesticks at support or resistance, especially
Okay.
when you trading indices, rejection candlesticks at support or resistance, especially when you're trading indices. The question is now, when you have them, when you see them, can you be assured that you can take a risk entry on them? as soon as they close or not, especially if they are engulfing candlesticks.
Okay, so
I'm not
rejection.
sure.
Okay, I got that. But just I think that one I don't need to note it down. Yes, you can. Yes, you can. Let me make an example so that we can see. Like for an example, let's say we are at our support, probably maybe on Nasdaq or USDT, and then we see this type of candle. With this long rejection, you can see that we have this long rejection and then just a young rejection at the top. So you can see that with this rejection, so what does this tell us? It tells us that the price opened here, and then what you saw, we saw sellers trying to push price all the way to the downside. But then when sellers were trying to push price all the way to the downside, they failed to continue pushing price because of buyers. What buyers did, they overcame these sellers and then they put price all the way to the upside. So what does this tell us? It tells us that buyers now are gaining what? Are gaining momentum to probably continue pushing price all the way to the upside. But what I like the most is if we get what a bullish engulfing candle now, this bullish engulfing candle, it must have some sort of like a rejection as well. Once we do get this bullish engulfing, then I like to take my entries here, going long at the close of what? At the close of this candle, having my stop loss just below this candlestick wick, and then targeting all the way to the upside about like 3%.
Okay, makes sense.
Yes. So I basically hope I did answer your first question.
Yes. That was the first question. Okay. For the second one, I had it with it was support and resistance, or they are the same, I guess, but when we support and resistance as well as demand and supply, they are the same. But now my question is with, let's say you see a massive movement up, maybe you're looking at the 5-minute, and then there's one 5-minute that prints, let's say we are bullish, but then there's one 5-minute that prints a bearish, and then there's a continuation from there. That area, can we also note it as a key area? And also, when we are on that question, can we also discuss what you call psychological areas that you sometimes refer to when we have these lives? Can also discuss that as well.
Okay, can you please start the question again?
Okay, so basically psychological areas. That's the first part of the question. Like, how do I spot those psychological areas? And also, yes,
yes.
And also I've seen sometimes when I do my back test that sometimes maybe there's a huge impulse to the upside, but maybe if I'm looking at the 5-minute, for in between that movement to the upside, there's maybe one 5-minute that maybe if we are bullish, there's a bearish 5-minute, and then there's a continuation from there. What do I do with that candlestick? How do I manage that candlestick? If I'm making sense.
Okay, I don't think I understand the question.
Oh,
You are looking for you are looking for some sort of like an impulse to the upside, right? On 15-minute candlesticks. On 15-minute time frame, I mean. But then on 5-minute time frame, then there's this candlestick that is bearish. Is that what you're asking?
Like let's take the whole 50 minutes, right?
Okay.
Because now it's 3 of them, like 5. You'd find
Okay,
that
wait,
maybe for the first 5 minutes.
Okay, the first 5 minutes is bullish, right?
It's bullish, yes. And then there's maybe a bearish 5 minutes.
A bearish 5 minutes. So,
but not too deep though. It's usually like just young, not too deep though.
Okay.
And
so
then there's
okay. So now we assume that this candlestick is bullish, and then this one is bearish.
Yes.
Okay, and then the next candle.
And it's bullish again.
Is bullish again.
Yes.
Okay.
But now with the bullish, with the bullish ones, they're usually big candlesticks, and then there's just a young bearish in there. How do I manage this candlestick?
This middle candlestick.
Yes.
I mean, okay. How do you mean? How do you manage this candlestick? I don't
Like,
understand. Okay, but
can I?
what I basically do in this case, is that I'll wait for price to come and test this candle. Once price do come to test this candlestick, this middle candle,
Yeah.
once price do come and test this candlestick, I usually call this the gambler candlestick. When this candlestick,
Okay.
I expect that this candlestick that's gonna open, it should come and test these areas here with a bearish momentum and a very long what candlestick that is short. And then once I see this candlestick coming and testing these areas, then I'm looking forward for long opportunities.
For buys.
Yes.
Okay. Yes,
Yes.
because I've seen them quite a few times. I just wanted clarity on those as well.
Powerful.
Yeah. I
Did
think
you get
from
the
now,
answer on that one?
I know I got the answer. I think from now we can just discuss the psychological levels when we're done with everyone's questions. Yes.
Okay, so the psychological levels, I think that we're gonna do it after the session, after we're done. Okay.
Yeah. Okay.
But just to give you a sneak peek, psychological levels are those numbers that ends with what, with whole number, like a zero, like 900, like 000, like 100, like 200, like 700, like 600.
Okay.
Those numbers are psychological levels, but not every psychological level is valid. But we're gonna talk about that because it's a bit kind of deep. So we're just gonna have to go to real chart to analyze that. But if you can just see here, what we were just talking about just now, as I was showing you the gambler candlestick, you can see that this for me is a gambler candlestick. So what I basically do
Okay.
is that I take my Fibonacci from this first push to this high of this area here. Already, one thing that I know, if you can just check, one thing that I know is that we are at the support level here. So I take this gambler candlestick. For me, this is an entry. For me, you can see that this bullish engulfing. For me, this is an entry. And then I take my long position, having my stop loss just below these areas and then looking to target all the way to the upside. But let me just show you my actual analysis on this. I think it's gonna come back. Yeah, I think it's gonna come back. As you can see that what is that we have here? Let me just remove this. As you can see, what is that we have here? We have this big level of support. If I can just go to my daily time frame, it's gonna be even more clear. So on my daily time frame, you can see that we have this level of support. You can see that we have first, second, third, and fourth touch here. And then what is that I look out for on my H4 time frame, on my 15-minute time frame? I look for structure to develop to the upside so that I can buy. You can see that now I have this first entry. I missed this first entry here. This for me, it was the first entry. You can see that I can put my Fibonacci from here to here. You can see that we rejected the 0.50 and the 0.61 golden ratio, which is here.
Yeah.
Which is here. You can clearly see that we rejected so nice. Let me just put in the Wall Street. You can see that we rejected so nice. For me, this was the first entry that we did miss. And then the second entry, here on the development of structure is I took my Fibonacci from here, from here to here. So you can see that from here to here. So now what is that you can see? You can see that we broke below this area and then we came back into this structure here. We broke below, we came back with a nice bullish engulfing candle. And then you can see that even the structure, the price was making higher highs, higher lows, made new higher highs, came back to test this higher lows. And then most chances that we're going to continue pushing to the upside are a little bit high, but not like the 100%. Yes. So yeah.
Yeah. Okay. All right.
Yes, so that was it with the Mac IP, but I haven't forgot that we still need to do the psychological levels. We're still gonna do them. Don't worry there. Code Baku, I've just connected you.
Yes, Mamba.
How's it going, my brother?
No, I'm good. Very insightful from Dylan. I think for me, it's a bit. I think my issue is on orders. I tend to use orders because I am not available during the day to look at trades. Yes, so sometimes when I'm forecasting, I find that I maybe place my order. You find that my order is a little bit too low, or sometimes it's too high, such that even when price is, for example, it just tags me in by a pip or two, and then it reverses in the opposite direction or goes against me in the opposite direction. Such that if I was present, I would have been there to spot something like that. So I'm just wondering, that refinement for someone who's not available to look at the chart, because I look at in the morning and in the evening when I'm back home again. So throughout the day, I really don't have that much screen time or no screen time at all. Just today that I'm fortunate. So I think my first question is on that. That getting as precise as possible using orders when I think basically how to improve the forecasting game such that even with your orders you place them accurately.
Okay, so one thing I can advise to, I can give you advice is that first of all, you should reevaluate the type of a trader you are, because of now you already know the problem that you are facing. Of it, you are always busy with your work, right? So that's the first
Yes.
issue that we have here. So the second issue is like you have to know the kind of a trader. You can be a day trader while you know that you are always busy. So you have to switch from being a day trader to being a swing trader, or to being what to being a position trader. So that's going to help you to minimize the time that you spend on the chart. Like probably if you execute 3 positions per week or 2 positions per week, that's going to be fine for you, because like you're not always on the chart, and you don't always need to be on the chart all the time for you to place those orders. Personally, myself, I don't trade using orders, because like I believe that people who are trading using orders, they are trading impulsive moves. Like for example, someone who is using orders won't enter here, but will place an order here, buy stop order here. So once this buy stop order here is triggered, eventually they direct went into what into their profit. So for me, that's not how I trade. I don't trade orders because of I have almost all the time for me on the chart. But if you are always busy, the one thing that I advise you to do is that you change your approach to the market. You don't day trade, but you swing trade, or you can position trade. Just open 1 position or 2 position trade or 3 position, and then you're out of the market. You only check your chart maybe every after 4 hours or every after 6 hours to see what's the new development that has been made after the 4 hour candlestick has been closed, like open and closed. And then that's when you can go and check your development of the trade. Probably you enter your position on H1 time frame, not like me entering on 15-minute time frame. You enter a position on H1 time frame. Like for an example, like let's say for an example, you find your entry here at the top. You find your entry here at the top. You're just gonna hold 1, 2, 3, 4. Then after this fourth hour candlestick, 1 hour candlestick, you know that okay, let me just go and check what's the development of my chart. Then you can probably maybe move your stop loss to break even and do what's going on. And then let the trade move again. After 4 hours, okay, you see that we've got a break and a retest. What is that you do? You trade stop, you move your stop loss probably to this error. Just to trade management, but not to look for entries each and every time. That's the best way I can advise you to look out for you to be trading, which is most suitable for you because you are always busy with your time. But other than that, if you still insist on putting orders and all that, so what I'll literally be doing is that for orders, like for an example, if you are looking for an entry here, you don't put your entry here. You wait for your order for price to go up, and then once price you say, okay, you anticipating price to go down. What do? You just put your price your order below below the price whereby you wanting like your buy stop your sell stop. I mean, you put your sell stop here to say, okay, because of I want to be selling here. Then you put your sell stop, so you get tagged in by price, and then price continue moving in a direction. That's the only way I could be possibly looking to use what to use orders, but I don't personally use orders.
All right.
Yes,
Thanks, my brother.
one thing you should know about orders is that you should be an impulsive trader. Like orders, you can't enter with the order and probably hold for the longest time. You should like enter with the order and then probably look to maybe hold for like a few moments or few minutes, and then you're out. Some sort of like a type of scalping situation whereby maybe you're entering and then you are holding for 15, 30 minutes or 1 hour, and then you're out.
All right, thank you.
Yes. So do you have other questions beside orders?
Yes. It was on a question on uh, back back testing. The like for example last year, you know that last year was a very difficult year, and right around March, April, the markets were like in a free fall, So it's something that is not usual. It's more of an anomaly that it was a fundamental thing that caused the markets to behave all differently. So I'm wondering, when I when I when I'm backtesting for in things like those, and how do I avoid the trap of being in a market that is biased, whether short or long? Let's say, for example, around March, like we saw, then suppose I'd be testing, and I find that okay, this I'm seeing a pattern of price all behaving the same manner like this. Uh, how can I avoid something like that?
I don't understand the question, my brother. How to avoid trading patterns like what?
Okay, like each and every year there is it is the year is unique to the happenings of that year. Last year we had COVID, and the market was in a free fall with a mini crash around March or April. So when you be looking, and I only, as I'll say, I only know this because I experienced it in that we were all there, COVID and whatever. So I'm saying for other years where I wasn't aware of something that fundamentally affected the markets. How do I factor something like that? So, for example, I could say, oh, okay, I've been backtesting Euro AUD, and it seems like or in 2019, for example, this market it has been moving, has been rallying upside for the majority of the year, when in actual fact that was driven by something that happened specifically.
On your yes, my brother. Like one thing that you should know, my brother, is that fundamentals, they do have influence over market. They do have an influence over market. They're gonna drive market, whether it's gonna go up or it's gonna go down. So there's no way you can run away from that. The market either way is gonna go up or it's gonna go down. But then one thing that you should know is that fundamental, they don't detect direction of the market. They only increase volatility. Like you can see that this move might be that this move was enhanced by what, by fundamentals, but then the direction has been already been decided by market makers. So there's no way you can say how do you run away from that. It's part of the market. You just have to try and play around with the price to see how can you accommodate such case scenarios when they happen. But there's no way that you can factor it out because it's part of the market. Or unless if you decide, okay, once I see that, okay, maybe there's fundamentals coming in, I stay out of the market, I don't trade. That's the only way you can do. But other than that, fundamentals is still gonna have influence over the market. They're still gonna say, they're still gonna increase that volume to say we are increasing the momentum now or whatsoever.
All right. No. That has cleared a lot. Thank you.
You do understand what I'm trying to say, my father?
Yes.
Yes. Fundamentals, they fundamentals, they're like COVID-19. It is there. But then one thing that you should know about fundamental, like let's go back to what we were just talking about now, which is Nasdaq. I think it was Nasdaq start. Let's go back. I think it's here. You see this crash? No, it's not this one. It's this one. You see this crash that happened on the here. You see, this was what? This was fundamentals. But then again, one thing that fundamentals, they're not gonna show you where to enter your position or where to exit your position. They're just gonna be like, okay, because of the economy of the country is not doing good. Okay, so back at the back of your mind, you know, okay, because of maybe if like South African economy is not doing good, what can you do with that? You know that rand is gonna go down because of South Africa is not doing good, but you still need what? You still need your technical analysis to show you where to enter your position. So there is where technical analysis comes in. You can see that now we have what we have structure forming and pushing all the way to the downside. So this is how we can capitalize on this what this trade pushing all the way to the downside. But fundamentals, they're not just gonna give you the direction or tell you where to enter your price or where to exit. They're just gonna be like, okay, there's a bad economy in South Africa. And then you know that if the economy of South Africa is bad, what's gonna happen? The market is gonna fall. So you already know that the market is gonna fall. Or that, but where to enter, you don't know where to enter, and you don't know where to exit your trade. And one thing about fundamental is that when they happen, when they talk about maybe the crash on Nasdaq, it's not something that's gonna happen. You don't know when it's gonna happen, but you know that it's gonna happen, but you don't know when it's gonna happen. Probably if now this vaccine of COVID, maybe they're not doing what is supposed to be done, then you know that the economy is gonna be going down. It's gonna be showing that what that crash on Nasdaq because of now people are dying. So it means those 100 companies that have stacked their own Nasdaq, they're not going to be doing pretty well because of if there are no people who are buying, the people are more focused on health and all that, then the companies are not making profit. So what does that mean to Nasdaq? It's going to be going down. Understand what I'm saying? But there's no way you can say that, okay, how do I affect not trading when there's affect our fundamentals? They part of it, the fundamentals are part of the market. They'll always be there, and you just have to try and accommodate them, not try to avoid them. You feel what I'm saying? Or if you decide, some people they don't prefer trading fundamentals. If you decide, you can still decide to, okay, you know what, I'm gonna stay out of the market if they are fundamental. That is some nice hacks out there that we can also use.
All right, thank you, my brother.
Yes. You have other question, my brother?
No. I'm good.
Okay. Powerful. Dylan, you can ask my brother. Dylan, you can ask my brother. Okay, guys, Dylan is struggling with his I think I don't know his mic or what. But just to get back to Mac iPad question, which was about psychological levels. So psychological levels is actually those levels whereby we have whole numbers. For an example, let me put it somewhere here. I can already see for myself. I can already see that here we have a level of resistance that is holding price. And then again here I can already see that we have this error here, which has been respected by price. And then again here I can see that we've already have these errors. And then probably here I can see again that we have these errors here. But now I still need to find my psychological levels because now, okay, let's see. We have, I come just here to my coordinates. So here I can tell that I have 1.66368. So I can just make this one 400. So you can see that now I have 1.66400 as my psychological level. So you can see that price always when it comes to the psychological level, it turns back. Always when prices comes to the psychological level, it does what? It turns back. And then again here, I can see that I have 15477. I can just make this one 1.59500. So you can see that we have this psychological level. Look, what I like about psychological level, they are so accurate. Look at this. Look at this. Look at as to how accurate these psychological levels are. Look at this, how accurate these psychological levels are. They are so accurate. So then let's look for a psychological level here. 1.5 to 700. 1.5 to 700. Look at that. Look at that. Right to the peak. Right to the peak. Look at that. Right to the peak. Look at that. These are what are psychological levels. Then let's go back to the last one, which is here. 1.4648. So I'm just gonna make it 1.46500. You can see that we have another psychological level, even though this one is not too reliable because of their manipulation and so on. But guys, this is how we identify our psychological level. So basically our psychological level, then once we've done analyzing and finding them, we can have what? You can have your support or resistance error here. You can have your error, your zones, not because psychological levels is a line. Then we must have what? We must have your zones here to show, okay, this is what is my zone. Price can turn anywhere in this what? In this zone, but I'm looking to enter at my psychological level. If price do come and touch my psychological level, then that's super, super nice and splendid. So basically, Mac iPad, this is how we analyze the psychological levels. This is how we analyze the psychological levels. You just have to look on for those numbers with what? With 0.
Okay, I understand. Proper.
Powerful. And then once you do get your psychological level, make sure that you play around with finding the most accurate zones where you can draw your zones to around that psychological level.
Okay, makes sense.
Yes. So I can see here Dalan Topiel is saying, seems like you can't hear me. My issue is with top-down analysis. Whatever I do, I end up swinging my trade, and I would like to day trade my trade. How can I scale down to my time frames? Okay, that's a nice question. I'm a day trader, so I feel like this question shouldn't be a problem. Okay, so what I basically do, guys, I'm a day trader. So when I'm day trading, I look at my H4 time frame to understand the market movement. Okay, I can see that on my H4 we had this down movement, and then again we started to see structure doing what? To see structure pushing up, pushing down, making what? Higher highs, higher lows, higher highs. So I'm expecting price to continue doing what? To continue pushing up, probably to make this double top formation before going down. So now already for myself, what is that I'm looking at for here? I'm looking for buying opportunities because I can see that the structure is now pushing where? To the upside. And then I go to my H1. Okay, before I go to my H1, what I do as well here, I also identify my key areas. You can see that we have a key area here. You can see that we have a key area here. You can see that we have a key area here. You can see that we have a key area here. And then you can see that we have another key area here as our target. And then again here, the structure was respected by price. You can see that we have another key area here. So you can see that now I've identified my key areas. And then here you can see that we have another double what? Double bottom formation, and then we're pushing to the upside. And then I scaled down to my H1 time frame. So on my H1 time frame, guys, this is where I throw my zones. So my H1 time frame, guys, I look at the most preferable candlestick to where I can throw my zone. So I can say that if I can take the body of this candlestick, this red candle is the most preferable for me to throw my zone. So you can see that I have what? I have my key area here. And then again, if I can take the candlestick of this candlestick here, you can see this last blue candlestick here. This is the most preferable area for me to throw what? To throw my key area. You can see that the break and a retest of this area, the break and a retest of this candle is so nice and accurate. So that's the most preferable for one for me. And then again, this last blue candle is the last preferable for one for me, even though we do experience price faking out here, and then we do experience price faking out here, but you know that this is the most preferable one for me, personally for me. And then again, looking at here, I can just take this, board of this candle, most preferable one for me as well, even if I can tend to push it back. Even if I can tend to push it back, we're gonna see that price was respecting this area here. So now, once I'm done analyzing like this, okay, let's just put this one as well. This candle is the most preferable one for me. Okay. Even if I can move it back, you can see that price was respecting it even back in time. So once I'm done analyzing like this, okay, what is it that I'm basically gonna do? I'm gonna scale into my 15-minute time frame. So once I scale into my 15-minute time frame, you can start now. What is that I'm waiting out for? I'm just gonna plug in my Fibonacci from here. to here. You can see that I have my Fibonacci from here. Price broke below and then came back into structure. So then I'm entering my long position here, entering my long position. So for me, this was going to be my first entry through what? Through my Fibonacci from this low to this high here. Let me just remove the first Fibonacci so that you don't get confused. From this low, I was looking for this low to this high, guys, as you can see, and you can clearly see that we turned just right exactly at the spot of what of our Fibonacci golden ratio. So this for me was going to be my what? This for me was going to be my first entry. This was going to be my first entry. Then looking to scale in my position somewhere here, using my Fibonacci as well, looking to target all the way to the upside. So you can literally see that I started from my H4 time frame, going H1, and then you can still go to 30-minute time frame, and then but I most prefer 15-minute time frame. Then this on 15-minute time frame, that is where you execute what? Your position. Okay. This is where you execute your position.
Mamba, sorry to interrupt you.
Yes, my brother.
On the second scaling, let's say suppose you missed the first entry. So the second push to the upside, that impulsive move, would it from the low to the high? That's where you'd be placing, for example, your second fib, so that you can see where the price is likely to make the low and then go higher.
Okay, we mean from this low, right? This low.
Yes, yes.
Okay, so I just take my Fibonacci from this low to this high, you see? And then once I have my Fibonacci from this low to this high, I can see that now, okay, we broke below this structure. We didn't respect this Fibonacci level here. Let me just put in this golden ratio or golden zone. We didn't respect this Fibonacci. So what I basically do now, I'll wait. You see this candlestick, that one that is open now. I wait for it to fail to break this Fibonacci. If this candlestick fails to break this Fibonacci, and then I'm going to be entering my long position. If it can close probably here as a rejection, for me, that is very, very nice for me to find that entry. If this candlestick closes as a rejection, and then I'm going to put my stop loss just below the 0.786 line for Fibonacci. Then I enter this position having like 16 pips stop loss to look up at 78 pips profit.
All right. Thank you.
Yes.
I hijacked someone's questions, but
come again.
No, I was just saying I hijacked a question, so I was saying thank you.
Powerful, my
Dylan who initially asked it, so thank you. Yeah. And you just get another one in the chat.
Yeah, that's powerful. That's powerful. Okay, so I see Dylan is saying, how do you find your levels on H4 time frame? You make it seem so easy, but it's really not. What do you look for to find levels? Okay, guys, when finding levels, I think it's not easy, to be honest, guys. Just that I'm used to doing it each and every day. So, but to finding levels, guys, it's pretty simple. Just look at the structure, how the structure is moving. The structure is moving like this. The structure is moving like this. So even here is the same thing. Is that the only difference here is that it's not picture perfect. You can see that here is not picture perfect, but this structure that you're seeing here is still the same structure that is in here. So what I basically do, I look for, like, okay, I can see here I have my double bottom formation. I can see here, we might be probably looking for this double top. So the goal for us now is price to reach this double top. That's the goal for us. But how it gets there or when it gets there, we don't know. It can start to consolidate and start to probably push a bit, or it can start to just or it can just go down, and then continue pushing up. We don't know how and when it's going to get there, but we know that eventually it is going to get there. So now, okay, we have our high and low, as you can see. So now we go into the structure. Now we're understanding the structure, the price movement. You can see that here we have the structure. It broke below here. You can see that we have a double bottom formation. Price broke above this double bottom formation, came back for a retest. And then again, you can see that price broke above this structure, came back for a retest. And then again, this one not so clear. This one is not so clear, but you can see that here there is a lot of noise that is happening. So you can see that there's something that we can use here. If I can just take it back, you're gonna see that price really does respect this area. If we were to put in as a zone, you can see that price does respect this area here. So you can see that this is a nice area for us. You can see that, but it's not so clear. And then again, you can see that we have this high here. Okay. You can see again that we have what? We have this high here, and then we also have this high whereby price broke above and came back for a retest, and then again price broke below, came back for a retest. So for me, that is a nice area for a resistance. So you can see that our goal, as much as we are looking for price to shoot to the upside, but we're still aware that price can shoot to the upside, come back and continue, just continuing with the structure until it reaches our target. So I think I elaborated the Galen as to how to identify your key areas on H4. Do you have other questions, guys?
I think this will be my last question. It's still on back testing, trying to look for the ideal pair that is in line with my trading plan. When I just think of it intuitively, I'm still really in the process of trying to refine and perfect the number of instruments that I can trade. For example, I'll say, okay, I'll take 3 currencies and indices and index such as US 30 and then gold. The index and gold, those ones are fixed, okay? But when it comes to the pairs, that's where the slight challenge is. Looking at trying to backtest to get a reliable amount of figures. I know it's not a shortcut, but I'm just saying, do you have a figure that you found, if after backtesting at least this many times, then you can form an opinion? Not that it will be concrete, but just an opinion. For example, okay, backtest roughly 30 times or roughly 200 times, something like that.
Okay, so I like that question because of it's most relying on backtesting, not just finding things easy. But it all goes down to different personalities. For myself, I love GJ. I love GJ a lot because it has a lot of clear structure. It gives out a lot of clear structure. I love it. I've been backtesting it as well. I found information about it as to how it moves. As I was telling you, like for me, like if I have like a level of support here, like I have a level of support, what I basically do, I just plug in my Fibonacci from this low. I just plug in for my Fibonacci from this low. You can see that we rejected the 50. For me, this is a nice entry. For me, this is a nice entry. Break of structure, came back for a retest, and then long position. It's very nice and clear and simple for me. So you can see that I always look for the same thing that keeps on repeating itself in the market. But through backtesting, my brother, you're just gonna find yourself. You have to find yourself. So I cannot say what works for me will work for you, but just go and look at DJ, look at DBP Audi, and look at gold as well.
Thanks, my brother.
Okay, powerful. I see here Dylan is saying, thanks, Mamba. I'm happy, but do we trade the indices the same as currency pairs, or do we approach them differently? It's the same way, my brother. It's the same way. It's the same way. There's no difference. It's just that indices, they have a high P value than compared to currencies, but it's the same way. It's the same way. Okay, guys, I guess there's no question. Thank you so much, guys, for staying and tuning into the session. Please make sure that you text me and review the session as to how did you find the session helpful to you. Thank you so much, guys. Stay blessed. It's me, your boy, Mamba. I'm out of the building. Let there be peace in the Middle East. Let our brothers and sisters be safe.
Thanks, Fanny. Thanks.
Powerful.